We had the dollar strengthening just a touch against the euro late Friday. That was after those disappointing numbers from Bank of America and General Electric. But the rand continuing to hold pretty firm against the greenback.
Well, against the dollar, we've seen the rand holding its own. A couple of alarming things coming through in the domestic market, and perhaps that's why we're seeing the rand weaken slightly against the trade-weighted basket. You know, we did see the euro track down to 148.5 on Friday. This morning, the dollar resuming its weakening trend again. Equities in Asia were up, but the rand hasn't managed to capitalize, and I guess a few domestic factors feeding through into that.
Well, what are those domestic factors, David, that has the market concerned?
Stephen, I think if one looks at developments that have happened over the last couple of weeks, the perceived or real, depending on where you stand, government interference in the MTN deal, the government, basically dictating to the telecom sector where to set prices. We've had a lot of noise coming out of COSATU around their involvement as far as government is concerned. We've had the Eskom price hikes coming through and indirectly affecting the Kuche smelter deal. A bit of concern coming through from an FDI perspective where the government interference is not going to chase potential investors away. And all of these things feeding through into a slightly weaker rand as far as a trade-weighted index is concerned.
David, do you think there's too much focus really on the dollar rand rate and we should be looking at the euro rand and sterling rand as well?
Well, absolutely. You know, we kind of get fixated in South Africa with the dollar rand level, kind of forgetting that there's a whole world out there as far as currencies are concerned, and it really is about trade weighted, and even more so these days with the strength of China, the strength of Asia, and the impact that that trade has with those nations as far as the rand is concerned. So really, we've been advocating for a long time we should shift our focus away from a dollar rand level really to a trade weighted band. And maybe look at the rand more specifically against the bigger trading partners that we have, and where it comes to specific levels against other commodity currencies perhaps, and as far as emerging markets are concerned, the emerging market basket.
Well, of course, you said the dollar had resumed its weakening trend today. I mean, do you see this weakening trend continuing? Because I know there is some concern in Europe perhaps that this weak dollar, strong euro is going to hamper a recovery in the eurozone.
Well, I think there's not really an alternative at this point in time, Stephen. I think quietly in the background, although the policymakers in the US are talking about a strong dollar and they keep reiterating and everybody talking about how important a strong dollar is, I don't think the US authorities are too concerned about what the dollar's doing at the moment, because it helps them to inflate their way out of trouble. So although we've got a lot of rhetoric about a strong dollar, I can't see an alternative, quite frankly. Of course, it's not going to happen in a straight line. And we did see the last couple of days the dollar take a little bit of a breather. But for me, there's very little alternative at this point, at least until the Fed starts hiking interest rates. And Mr. Bernanke has said that's some time away. So I think the dollar will remain on the back foot until we see some new developments on the interest rate side.
Of course, we were right at the beginning of the US earnings season. We had some reports out last week, mostly positive, though we did have a couple of negative ones coming out on Friday. Do you think that the markets will remain quite volatile while we are seeing those results coming through?
Yeah, I think the expectation was that we're going to see good results right across the board, particularly when JP Morgan released their results. When Bank of America came out and various others, we saw that it's not plain sailing for all industries and for all companies reporting. And I think the expectation, of good results is going to need to be backed up by some solid results. Otherwise, we're going to see the Dow languishing. But for the moment, it looks like at around 10,000, the markets are adopting a wait-and-see attitude.
Of course, we don't have much on the local front this week, but we do have the Monetary Policy Committee meeting on Wednesday and Thursday. And of course, this is the last meeting that will be led by Reserve Bank Governor Tito Mboweni. What's your expectation there? We had that retail data out last week that was quite negative, but of course, we do have quite a lot of inflationary pressures ahead of us, don't we?
Well, absolutely. I think it's, I really can't see how we can cut interest rates again. The rest of the world is moving into a tightening cycle, and I guess traditionally we've been 3 to 6 months behind that cycle, if not longer. But it's very hard for me to find any reasons for the good governor to cut interest rates any further. Interest rate cuts in the past 12 months, it does take some time to filter through into the economy. Inflation, particularly on the Eskom hikes, is going to be a problem going forward. I guess right now the economy is still a little bit of a slump. But as the global picture looks a little bit slightly better, that should start impacting the domestic economy. Hard for me to see how the MPC can cut rates further.
Your outlook for the dollar rand in the short term?
I think again it's really about focusing on the trade-weighted impact of the rand. I think the dollar will continue to weaken, and that will filter through into dollar rand's strength or rand strength against the dollar. But I'm not so sure that against the euro and against other emerging market currencies and commodity currencies that we're going to see that same strength filtering through.